And let's jump into the panel. The topic of the panel is, should startups consider M&A this year? And I want to introduce our another panelist who joined us today. It's Nick Davidov. He's the only guy who wasn't speaking before. I guess he's a hidden gem of this event. Nick, welcome.
So yeah, I am Nick Davidov. I'm a co-founder of a company named Gagarin Capital Partners. It's a boutique venture capital firm. We invest in seed stage AI companies. Got 19 companies invested so far. And I have an experience of selling a company to Facebook and also an experience of somebody selling a similar company to Google a year later. Been through many negotiations with as a founder and as a advisor, also as a deal maker and as investor too. So got some experience on M&A. Also, I co-founded a company named Cherry Labs. We do computer vision to help seniors stay at home independently, which is currently also receiving some M&A interest. So it's going to be fun.
Yay, amazing. So today, my goal was to make this panel as balanced as possible. So we have both entrepreneurs, investors, Serge on the legal side, Graham on both entrepreneur, legal, and investor side, on both buyer and seller. So let's just jump in. Guys, everybody who's watching the stream, please feel free to drop the comment. Again, we have on the panel Nick, Jeffrey, Graham, Jinal, and Serge. Thank you, everybody, again. So my first question would be to you guys. Since you are seeing both sides on the market, both the VC and the startup, what are the biggest trends, especially right now in the COVID time, that you see are happening in between startups and VCs?
VC trends basically are following the Chinese pattern. So in China, when China was hit by COVID first, and pretty much they went on lockdown beginning of January, as I remember. So February compared to February last year in China was minus 40% of VC deals in volume and about minus 60% in quantity. I think, I don't have March statistics yet, but I think it should be lower. Mostly because what happened is that when the initial shock hit, VC firms just stopped taking in new presentations, and everybody took some time to figure out what's happening to their portfolio, who needs money, who has less than 6 months runway and needs a bridge round or something. So everybody started looking inside, and some of the deals which were still happening were deals which were negotiated, sometimes already signed and just not announced. And this influences the statistics. Pretty much nobody was taking new deals. So since we were a little later with lockdown in California, and also we got hit a little harder in terms of how the virus is spreading, it looks like it's going to take a little longer for the US venture capital market to recover. I'm seeing that just now people are starting to take in new presentations. Mostly they're still looking at things which are benefiting from the crisis somehow. So it's either telehealth or like online education, something like this. I'm seeing several deals being closed, new deals within like my immediate network. Some of our portfolio companies are successful raising, but everything's kind of slow.
Mm-hmm. What about you, Jeffrey?
Hey guys, I'd say that I would agree 100% with that. It has been the same in Canada as well, and in the networks that we're working with in Canada and the US. I find that right now, what I've been kind of sharing is that if there's a group that was investing $500,000, they're now investing $250,000. So things have reduced themselves probably in half, but they're still investing. We're still running events. We're still meeting with startups. We're still making investments. Things have slowed, and the investments are probably going to gear a little bit more towards companies that have been able to make their way through this. But at the same time, there's also a lot of good opportunities for companies that will be coming out in the next 6 to 8 months. So I think you're going to see a big shift in early stage companies, pre-seed and seed round startups, where they're actually going to be working for when we come out of this in, say, 6 to 8 months. And they're going to be great opportunities. It's kind of, you're looking at a business might be a little bit depreciated at the moment. So there's a lot more deals. So you kind of have to value what you're looking for and what your portfolio is going to look like in a year's time. But I think overall, it is the market's there. People are investing. They just have slowed down a little bit. They're protecting the portfolio that they do have. We've been running different events. We ran one last week, and we'll do it again this week, where we had all of our portfolio companies pitch, and it's about E2E, which is all about entrepreneurs helping entrepreneurs. There isn't going to be a lot of money if there is a sideline and it's been reduced. So those startups can start helping each other. How do we all survive this and grow with needs and wants? And then from there, you'll start to find different avenues into government funding or other VC or angel investments.
Right. Serge, do you see any change from your perspective?
Oh, absolutely, and Nick pointed it out. I mean, there's really two things. Both VCs as well as PEs have been first kind of looking for those first couple of weeks as to what the impact was on companies that they already have in their portfolio, and if they need to be shored up and are properly capitalized to make it through this crisis. And therein lies the big question for most CEOs is basically, do you have the balance sheet? Do you have the financials to make it through a crisis like this, right? Because nobody has a crystal ball. We don't know if it's going to be a narrow or a very wide V-shaped recovery, or whether this is just several more waves to come that are going to have a longer impact on the economy and, of course, on companies. And we've seen the whole spectrum. We've seen companies that have gone from being a nice to have to being now absolutely essential and seeing 30 to 40% growth, and other companies that were catering to the restaurant, and we have many of them here in Southern California, to the restaurant business, hospitality, travel, and that pretty much had to overnight lay off 25 people because they saw a 95% drop in their revenue. So it really comes down to being realistic about what your options are, right? And definitely, I mean, if you think you have some runway left, then you definitely will have to get into cash preservation mode. Of course, you want to make sure that your employees are healthy and safe and well taken care of. But you also have to make sure that your company can survive a prolonged recession of 6 to 8, 12, 14, 18 months. And one of the things that unfortunately we're seeing too much of is people latch on to the happy news, right? Every time you see one economist come on MSNBC or on Bloomberg, and they say, oh, this is all going to be over in 6 months. Unfortunately, it will not be the case, right? The economic impact is still to come, and that will automatically affect, I would say, any vehicles for funding, any vehicles for sustain companies through the crisis.
Right. Thank you so much. And as based on your answers, it basically seems like there will be some companies that won't be able to sustain themselves through the longer period of crisis. So some of them will be considering, and I am already seeing it among our community, that they are considering the mid-market, either acquisition or merger with other companies. So if you would be talking to the founder, what would be one piece of advice you would give them before going into M&A?
Before going into M&A, you have to give it equal, if not more, consideration, because it may not always be the end all, or you were hoping to hold out for another 2-3 years to have a better top line, better EBITDA, and expecting to get a higher multiple. Time is now. Right? I mean, you really have to look realistically at what you could potentially get out of your company. And from all the other presenters that talked about, ultimately it comes down to, can you build a story? Are you attractive right now? Do you have numbers to be attractive? And then in many ways, M&A should be one option of many that you should definitely consider right now. So.
I think there's an interesting piece to that, is that M&A is a great facet to be looking at, but at the same time, it takes a lot of time, effort, and work to build your M&A side of things if you're a startup selling, and it takes a lot of time on the other side. And if you're not stabilized and you haven't stabilized your business, it's something you probably want to look at first, making sure that you've balanced everything out, that if that's from having to reduce your staff, burn rates, everything, because the last thing you want to be doing is thinking you're going to sell your company in a month. And a lot of times in the process, it's not going to happen.
Unfortunately.
Yeah. But the tough part of that is that they end up, and this is the sad reality of it, when you're in a depreciated time, M&A will take longer, and they will do that intentionally to force things down, because it's an opportunity, right? So everybody wants to get the best value over the next 3 to 6 months out of your company if they're going to buy you. So you really need to support yourself, make sure that you're balanced out everywhere. So if you take this endeavor on, you'll come up on the outside instead of being forced to sell in 3 months because you've depreciated your value because you focus too much on the sale and not enough on balancing your business to move forward.
Jinal, what's your take?
Echoing what Jeffrey just said, I mean, either you are a growth story or you are a value or a profitability story. And if you don't fit any of that, then you are in trouble. Instead of thinking about selling the company right away, maybe figure out what story you want to be. If you feel like your growth is slowing down and you're still burning a lot of money, then fix that first yourself, because you will be leaving a lot of money on the table if you don't do that. If it's a PE acquirer, they will do that eventually anyways. So why not do that firsthand and then get benefited from the valuation? But yeah, I think all the speakers covered that. I unless you are growing significantly because of the trend, and if you want to sell the company, maybe that's a good time. But otherwise, get the business in a good condition, get the balance sheet in a good condition, and then give it a few months, and then you can go through the M&A process.
Thank you, Jinal. Graham, would you suggest inviting some senior management on board to maybe increase the position?
Well, I think it depends. If you've got a weak business, then most definitely. I think if you've got a strong business, you have a strong business. I mean, if your balance sheet is strong, if your trading position is strong, I think we've already heard that there's 4 trillion of cash out there to be invested. So that 4 trillion is still there. In fact, it's just got a bit cheaper. So if you've got a strong trading model and you can demonstrate that, well, I can give a return of 15% and you can get money at 2 to 3%, then those companies that are in a position to invest their own cash or to borrow cash to do that, then those deals will still happen. And I think coming back to, is this the right time to start? It probably is, because it's going to take 15, 18 months, whatever. And who knows what the market is going to look like in 15 to 18 months. But it's like anything. It's like selling something. If you don't start now, you'll never sell it. So the cycle has to start somewhere, and it should start now. I think it's a really good time to start the cycle. If you've got a business which isn't performing so well, maybe not through the fault of the management, through the crisis, then I think you should absolutely look at what you have as your resources internally right now, and once again, take all the emotion out of it and make the changes you've got to change. And you've got to bring in people who know what they're doing in this market.
Thank you so much. Nick, what do you suggest? Holding hands, closely holding hands of the founders through M&As. What would be your advice?
So there are some cases where founders have already decided that they want to go for an M&A because they kind of lost hope for their individual path. And they see the only future for their product is to basically be part of something bigger. So in that case, I would just silently accept that and start helping them. But in some cases, I would talk them into reconsidering, because times like this are basically times when things which we took for granted, things which we took for constant, like gravitational acceleration. They are changing. And since G is changing, which G is no longer 9.8, it's like 30 now. So whatever you do has bigger momentum. And we need to figure out how can we maybe do something to form a new habit for users. If a company's product can become habit forming, in these times, and in times like this, people do change their habits a lot. Like we can see that we're using Zoom for conferences now. If there's a chance to somehow utilize this time for growth, for reversing the trend, maybe it's better not to focus on M&A because it's going to be super time consuming. Maybe instead of doing that, we can lay off some of the people, take in some funding, and utilize this time for growth. But again, if founders have already decided on that and just like calling me and saying, hey, Nick, I'm going to talk to Amazon tomorrow. Like, what do I tell them? I would just be happy to support them.
That's amazing. So we can learn a lot from the success stories, right? I would also like to mention that we probably learn even more from mistakes. So question to you, our dear panelists, what were the most disastrous stories or mistakes that you've seen founders doing through their M&A? Of course, no names, but if you could share some stories and examples would be amazing.
Well, I mean, procrastinating is the worst thing you can do. I speak from my own experience. We had one venture back in 2000 that we had started and was supposed to be funded in August. And there was a primary and Merrill Lynch. They were supposed to come in for about $19 million. Of course, the market tanked, and August came, and all the telecom pretty much died. So Merrill Lynch came back and said, well, all our investments are frozen. Let's revisit this in December. Well, between August and December, we pretty much burned through all our cash. And December came and went, and Merrill Lynch did not fund in December. And now we were facing choice of taking out second mortgages on our homes to make payroll. So in January, we basically ended up folding. And that is a story that you will hear in many cases now, right? And so again, out of own experience, I basically say, don't just hold on to idle hopes that this is all going to be fixed very quickly. Start acting now. And Nick said it, Jeffrey, you all pointed out some of the things that you need to start doing now to make sure that you can ride this out. And if you're even remotely considering selling, you need to start the process now, because it takes a good, I would say, a month to a month and a half to prepare a company to go out to market, and it will take between 6 and 12 months to get them sold.
Thank you.
One thing I would echo. Sorry, go ahead.
Everybody has these stories, but this is quite a recent one. I know a company in Silicon Valley that received a bid of $6 billion in October. and turned it down.
Oh my God.
Very well
why?
funded from a very, very prominent company, and they turned it down. And there comes a point, and it might have been the right thing to do. I don't know whether it was the right or the wrong thing to do, but I don't think they would get a bid of $6 billion today. I'll leave it at that.
That's interesting. That also happens. It's like a mic drop, right?
Timing is everything.
Absolutely. Ehudah, you wanted to add?
Things too, right? Sometimes we tend to keep holding on to it, and you guys all mentioned this emotion, and you hold on to something thinking it's going to be better. And if anybody plays in the stock market, sometimes the longer you hold on to something, it turns really quickly, and then you have to deal with the outcome, and the outcome is usually on the wrong side that you want to be on. So if you're engaged in a great conversation and you spend 6 to 8 months or a year in that M&A process, and you're ready to close it, close it. Don't hold back. A lot of the times you hold back thinking there's going to be a better deal coming tomorrow, and then like you said, that $6 billion gets wiped off the books, and we had that happen with one company. Another company, we did the same. We went in aggressively to take them over. They promised us they wouldn't sell to their competitor, and at the end of the whole thing, they sold to their competitor. So it didn't matter how hard we came in on them, and it didn't matter when we didn't go in hard. Everybody gets attached to emotion, and you got to figure out how to balance that the best.
Mm-hmm.
I just mentioned one thing. I think any decision based on greed or fear is usually a bad one. So if you're in a situation where you have a good offer, it's in a range. If you have to know your range for what you're willing to sell the company for. And if it's within that range, take the deal. At the same time, don't do something because your fear, the world is like, you're getting involved in social media, they think the world is collapsing, whatever it is. Because it's really an opportunity right now. Through this uncertainty, you could probably create so many strategic partnerships and alliances that probably wouldn't have even been available to you previously because they would just say no. But now with this uncertainty, you can actually really grow your company better than you can imagine. And again, if you have a good offer to sell, I would take the deal also. Thank
you, Ehudah. Nick?
Yeah, I think that I agree with what the colleagues just told. I have an example of a company which was not bought by Apple 3 times, Google 3 times, Snapchat 3 times, Facebook 2 times. An amazing story of an app which started with like hyper growth, so everybody wanted to get it, get their hands on it, and came right after Masquerade. Google offered a pretty good deal, and then Snap offered a pretty good deal, but the founders did not take it because they had an idea that that's just too low, that the hyper growth is going to continue for a while, and that was a decision made on greed, so that was a bad one. And then basically as time passed, companies started to figure out that first, this growth is not going to continue forever. Second, that they're gonna actually catch up with different technologies, and then they started looking more closely at different things. And the closer you look, the more your expectations deflate. So it was a nice story to learn from. So first outcome, I'd say, do not make decisions based on greed, and also try to identify things which might raise concerns beforehand. Thing number one is toxic behavior in founders. This has to be cured immediately, or the founders have to be changed. Otherwise, the company is not only going to have troubles in M&A process, but just going to have troubles with users, with employees, with everything. Toxic culture, it just contaminates everything around it with its toxicity.
Absolutely. We need a vaccine from that, right? So I would like to wrap up this panel with the last question. If you would imagine having this panel 5 years from now, 2025, giving it the most futuristic, the most brave prediction, what is happening on the market today in 2025? I'll pass it to let's start from Jeffrey, and I would like you to give a role. I know Jeffrey can think fast.
That's a great question because it depends what happens in the next 3 to 6 months. If the trending market right now is that today everybody comes out with their financials, half them beat the street, and things are going to balance out. But the next quarter, things are going to take a big crunch because you've got 2-3 months of data where companies aren't selling, airlines aren't flying, retail's not working very well. So you're going to take a big crunch. So does that cause that double dead cat bounce, which is going to bring the markets back down? And then the recovery could be that longer V shape. It's undecided, but I think that in the next 5 years, I believe that we will be a lot more digitally enhanced. We're going to be, I think VR is going to be quite huge, AR. I think we're going to be augmenting a lot more things, more virtual meetings. I think this is kind of the trend. And I think that there's going to be a lot more acquisitions and mergers, merging things together, but there's going to be a whole new stream of startups, a whole different space that we didn't even envision. Just like when the sharing community started in 2008, I think there's going to be some big focus that's going to come out, and I think a lot of it's going to be around healthcare. I think that's really going to make a big pivot, and you're going to see a lot more businesses coming out and actually getting into healthcare versus being stopped at the door. I think that protectionism is going to change, and people are going to be way more open and demand more of healthcare at a quick and easier way to do it. So,
thank you. I like that future. Serge, you want to go next?
I think in 5 years' time, we'll be 3 months into a new presidency.
Right.
So you've got to think about that in the US anyway, in the USA. So that will depend a lot on, you know, who wins the next election and then who wins the one after that. I think personally, I think we will just be coming out of things. Maybe it will be that election that people are really waiting for the market to take off. So that could be a really good time.
Fingers crossed, right, for the next election.
Fingers crossed. You know, I don't want to get political though.
Yeah, absolutely. Sergey?
Yeah, I mean, it's this has definitely been a shock and a warning to the system. So I think there's definitely, and I follow that area very closely. The healthcare sector is going to get a huge bump, but also the way we live, work, socialize, travel, all those dimensions are of course going to have an impact on new ventures, new technology. I mean, you already see it. People are fleeing the big cities because they are starting to become more concerned not about how this pandemic is going to play out, but when the next one's going to come out. So I think we're going to see more and more virtual working companies, virtual companies essentially, much bigger emphasis on gig economy, and then everything else. I mean, entertainment is going to see a big shift as well. I mean, I am just laughing when I see virtual Formula One and virtual NASCAR, and I'm thinking about some of the big events drawing thousands and thousands of people, like Tomorrowland and all those kinds of things. All of that is also going to change. So we're in for a major shift in the next 5 years. So.
Exciting. Ehudah?
Yeah, can you hear me?
Yes.
I think it's a fascinating time we live in, a lot of opportunities, specifically in there's a distinct microevolution that's happened with this phenomenon that has created essentially polarization between human interaction. You know, the way we interact is in a way forever changed. The way we work is forever changed. I mean, before in Los Angeles, you see some people, you say hi, now you walk as fast away from the guy as possible because you're scared, you know. So I think subconsciously, this is a huge, huge effect on people. And so aside from personalized healthcare and revamping probably healthcare in America and the process of that happening in a more effective way, you also see, I think, a big trend in educational entertainment, because of there's not so much as much social. People need experience. People want entertainment, but they also, because kids can't go to school and so on and so forth. So I think the group or whoever comes with educational entertainment will really be able to dominate that market and do very well.
Beautiful. Nick?
I think a lot of trends which were already happening are just speeding up with this change. It makes people shift their habits a lot, and some of the industries we were thinking as already digital were in actual fact not digital. For example, airline tickets. Like half of airline tickets in the world were still sold through offline kiosks. So will there still be offline kiosks for airline tickets after this thing? I'm not sure. A lot of bets we were making in Gagarin Capital on things like robotics or AI automating some, routine operations and field operations, remote monitoring things, also going to be benefiting a lot. I think a lot of robotics in delivery are going to be a thing because, deliveries are super short on people now, and people understand how important that is, how the infrastructure of delivery is really forming our today's society now. Also, various robots for farming, sustainability. For example, we got a bet on a company making harvesting robots for tomatoes. They have huge demand right now. They're exploding with demand. And I think it's going to be a big trend for the next 5 years. And also, this COVID crisis has highlighted a lot of problems which big companies and medium-sized companies have with their ability to shift to remote work, to working from home, especially in terms of cybersecurity. A lot of major, like Fortune 500 companies, are struggling with enabling their people to work from home, because they already have a lot of policies in place which prevent them from accessing their documents remotely. They have to revolutionize it a lot. So usually it was a route for emerging markets to go through revolution into revolution into revolution. And I'm not speaking politically, but which is also the case, but more in terms of technological revolutions. And the West was always following the evolutionary way. Now we have to revolutionize a lot of things. Will we still use checks? I doubt that. Will we use fax machines? I doubt that. But we're still using them. I literally had to send a fax yesterday to my insurance company. Ridiculous.
So hoping that insurance companies will actually change the way they work by the 2025.
Everybody's going to be changing.
Absolutely. I hope in 5 years from now, we will be hosting this meetup in VR with perfect holograms, avatars, and everybody will have the personalized health system, the biohacking, to the point of being the most productive human at any time given and the healthiest humans. And let's shift into the questions. I think we had a couple questions in the chat, and guys who are watching right now, please feel free to drop questions in a Q&A section or in the chat, better in Q&A. Answering the question, yes, this will be shared on YouTube. This is shared right now on Facebook. You can go to coalition.co, find all our YouTube channels, also follow speakers. I'm sure they will share it on their social media as well. So answering the question was, what is the opportunity coming out of the crisis? Will there be shift in terms of, funding? And for example, not having the location of your primary business in Silicon Valley anymore? What are the opportunities?
I think I can take a quick spin at it. I think the way of looking at what the future looks like, myself, I've operated a company for 14 years virtually. We have virtual in 4 countries, and we've done that because we didn't see the point of having a space. Where does that shift to now? I think 50% of the population will probably start to push that way. So REITs are going to have a tough go at where they're positioning their business and how they bring value back to get people to collaborate and work together. So I think there's a fine balance of where those types of businesses are going to shift. What is the outcome? I think from a government standpoint, there's funding going around like crazy right now. So it is really speaking with your advisors, your government officials, and figuring out how does that benefit your company to stabilize your business as you move forward personally and in business. But there's lots of them. We're running a panel on Monday just on the Canadian side on what are all the options for startups and what they've done. So I think that you do have to start looking, because again, as everybody said, if this weather takes us 6 months to a year before you settle down again, then there's going to be a lot of people looking for avenues to protect themselves as they move forward. And from what I've seen on a report, that things won't be fully functional in Canada till November 1st, and they're saying October 1st for the US. And that is everybody back to what normal is supposed to be. So.
Right, Nick, and I wanted to ask this question to you because Nick just released the video with the famous Russian blogger where he shows the Silicon Valley, and Nick is renting a beautiful house in Los Altos Hills, right? So do you think it still makes sense to be in Silicon Valley after this?
Yeah, I think people are still, especially people in Silicon Valley, are going to be very local. So what I've learned when I moved to Silicon Valley 5 years ago is that if you are in Silicon Valley, it makes raising money here quite easy, but it does not make raising money in New York any easier than if you're in Moscow, because all of the markets are super local and people still value meeting people in person a lot. So I guess even after we go to like phase 3 or phase 4 of self-isolation, which basically means that most of the venues are going to be opened and started to function again, people will resume meeting for coffee to listen to pitches, because this interperson connection, especially in the seed stage, you don't have any solid data to base your decision on. Most investors make decisions based on solid data and their gut feeling of the person. And even like on pre-IPO rounds, what I experienced when we were doing roadshow for Kiwi IPO in 2012, a lot of people were not even listening to facts. They were just looking at this person and thinking, can this person sell the same story in like 6 months for more money? Will I be able to make money if I invest like 50 million now? And a lot of seed investors, that's actually the only round they can base their decisions on. Like, will this guy raise again? Or will this lady be able to execute on this plan? And like, you have no other solid data to base your decisions on. You just look in the eye and say, okay, I believe this person.
It seems like true, right? Right. Anybody wants to add to this question? If you have an early stage company right now, you're just in a concept, just an idea stage, what should you do? Yes.
I think if you are in that stage, you're in ideal position. You do not have a thing called runway, because you're probably alone or just with your co-founders, and you only need money to survive. You like personally, you don't need money to have your business survive. And actually there is a lot of funding available for you, because pre-seed and angel investors, they do not pay too much attention to economic cycles, because well, you're only beginning your company. You're probably at like MVP or even pre-MVP stage. So you're going to finish your product when everything's going to be over. So why should we consider this crisis if it's going to take like a year for you to actually release your product?
Right. Somebody wants to add?
Yeah, could I just say a couple
Absolutely.
things? I think it's worthwhile for people to note that there's so much money available, and the people are just sitting, investors are just sitting on money, and if they need to deploy it. I mean, very few people that I know of would just sit on cash for extended periods of time, but people get itchy and they want to deploy it, and interest rates are low and they're going to stay low. So you're really in a good position, actually, if you structure things and demonstrate that you are seeing into the future and seeing that you'll be able to like your business will be able to survive and grow through the waves of COVID. Because I really believe that this COVID's not over. If you look at the 1900s earlier during the other influenza or other flus that came about, there's cycles to it. There's definitely cycles to it. And probably in November, there'll be another cycle to it. So if your business or anything you approach is based on being reactionary, then your chances of succeeding are pretty low. But if you're looking into the future saying, okay, this is what it's going to be, I know there's a lot of money available, how do I structure things so I can leverage this up? How do I leverage the uncertainty? If you think of how to leverage the uncertainty, put together credible people who've done it before. That's what I would say. When you're starting your organization, put your dream team together. Put multiple advisors together. You don't have to give them equity. You don't have to give away the house, but structure some kind of deal where you can leverage their advice, leverage their credibility, and create some really great growth strategies for how you can get market adoption, how you can change and grow, and it really just dominates the market, or at least a portion of it. But just the key I want to summarize, there's so much money available. And Donald Trump just released another 2 million, which is 2 trillion, excuse me. So do you realize what's going to happen to inflation? I mean, there's it's really it's an entrepreneur's market if you approach things properly.
I like how positive everybody are. Just opportunities, no crisis, right? Let's